Hello everyone! This video is designed to help you find sniper entries, improve your risk to reward ratio and win rate, and master your trade management. Today we are going to talk about some interesting setups that the market gave us this week. We will dive deep into the thought process behind them and look at the trade management as well. As always, these are 100% real, unedited setups. I will give you an honest insight into which trades I actually took, which ones I skipped or missed, and exactly why. I will also talk about mistakes I made, so you can learn from them. Let's get started. We will show you the setups we will talk about today as a preview, with a short commentary, and thereafter we will take a deep dive. The first one is about catching the exact bottom of the day and describing the situation before this trading opportunity occurred. It is a very deep analysis containing topics like timing entries properly, how to avoid overtrading, how to spot the right exit for your position, and more. Basically, a masterclass on how to actually read what the market is telling you instead of just guessing and hoping for the best. So, if you want to start with something easy, you better start with the second example. The second example was a very easy to spot double bottom with a nice support on the Heatmap. The kind of setup that's so beautiful, it practically jumps off the screen and begs you to trade it. The ES futures went up about 50 points from here. We will talk about the key aspects of this trade, so you will be able to make similar trades in the future. The last example is a typical rejection of an important level, and we see a similar setup frequently, so it is something worth learning. Let's dive deeper. First example is from Tuesday. The whole show started right at the top, where the market slammed into a bigger pool of liquidity. On the retest, we can clearly see limit sell orders lining up. There was also a larger market seller, the red dot at the first top, sitting exactly at the second standard deviation of the daily VWAP. I decided to swipe left on this trade. Why? Because we had seen almost identical setups over the previous days, and most of them failed. You can actually see the exact same copy-paste tremor on the left shoulder. The market hits liquidity, the mid-sells show up to look important. A larger market seller appears right at the second standard deviation of the daily VWAP. And while the market drops a few points to give you hope, it hits support and makes an explosive move higher. You can see a similar support situation at the top as well. The initial reaction was just a bounce, and only then did the real move down begin. The only difference was the size of the limit sell order. At the very top, you can see a much larger, dark red order. I also use another heatmap for confirmation, and that one showed no signs of a top. So even though my gut told me this was the peak, the trade didn't fit my exact criteria, so it was a no deal. And that's exactly where discipline enters the chat. I decided to pass. And according to my rulebook, this was the right call. Why? Because I know myself. If I allowed myself to trade every single hunch, I would overtrade, and we all know how that story ends. When you watch the market sprint in your direction right after you decided to sit it out, your mindset needs to focus on satisfaction. Being satisfied that you were able to obey your rules, instead of chasing the move like a dog chasing cars. Just patiently wait for the next setup, and if you feel that you are starting to tilt, just step away from the screen and go touch some grass. And yes, it is incredibly easy to preach this in hindsight. Seeing things clearly under pressure in a live market is a completely different beast. Nobody is perfect, and we all make mistakes. Recognizing that you are tilting early on can save you a lot of money. Believe me that. I have paid some tuition fees to the market in my career, and I still make a donation from time to time The real secret of a pro isn't never losing. It's making sure your screw-ups do as little damage to your P&L as humanly possible. Every professional trader has to learn that. This market behavior was more difficult than average, as the price pulled back 2 points before the negative fourth standard deviation of the daily VWAP, and only then went up again, overthrowing our target significantly and hitting our secondary target, the point of control. Yeah, the market just loves playing with our emotions and giving us minor heart attacks before hitting our targets. Let's talk about my exact execution and trade management. I jumped in immediately once I spotted the seller and set my stop loss to 3 points. I was targeting the negative first standard deviation of the daily VWAP. However, I tend to take some profits once the move reaches 10 points. It is often a place where the pullback happens. This move went up 10 points almost to the penny, and I spotted two things: an absorption, violet numbers on the heatmap, and a resistance building with limit sell orders appearing. In this case, I fully closed the position and hoped that I would find a new entry later. I often do that, and yes, it sometimes means missing a bigger move. But I also lock in a good trade and avoid pullbacks and stop hands. And my mental health definitely thanks me for it. In this case, there was no really convincing re-entry, so I missed the even bigger move coming later. But yeah, it's trading, and if you are able to trade with size, these 10 points are already good enough. Now we come to the actual setup I traded, the moment you all have been waiting for. On the way down, especially on Tuesdays, you have to think about the possibility that the market reverses at some point or give us at least a big bounce. But you cannot try just to catch the falling knife unless you really enjoy losing fingers or inflating your broker's ego. There are setups that give us higher probability. One of these setups came into play today. It was about spotting volume anomalies. All the selling pushed the price lower in the selling channel. Once we hit the bottom, an unusually big seller appears and marks the entry for us. Your stop loss could be just 2 or 3 points, and the main target was the negative first standard deviation of the daily VWAP. So at least a 1 to 4 risk to reward, and maybe around 70% win rate. In the trading world, those numbers are basically a cheat code. At this point, we cannot say if it will be only a bigger bounce or the absolute bottom of the day. But even the bounce is usually at least 10 points in such situation, so it is still a good trade. It's already thought this was a very nice setup shortly after the open. We can see a double bottom where limit buyers are coming in as a support, especially on the second bottom. At the same time, the price also fluctuates around the point of control, the yellow line. The market goes parabolic exactly at 9:50 a.m., which is also common. In theory, you could catch 50 points of upside. It was probably the best trade of this slow week, and as luck would have it, I was not at my desk at this time because I had something urgent to deal with. Because the market always knows exactly when you step away. I was away for about 10 minutes, and this is the result. And it's something you should seriously consider when you are backtesting your strategy. Your backtest spreadsheet doesn't care about your real-life interruptions. Sometimes you miss the winning trade for some reason, and what's worse, you could tend to overtrade thereafter just to make up for it. The dangerous psychological urge to take revenge on the market for moving without you. So the trade management part here is just theory, but let's talk about how I would probably have traded this setup. I would buy at the first bottom, as there were some signs of bottoming. The big market seller on the way up would make me worry a bit and tell me that we could have a second bottom later. For this reason, I would close at least 50% of my position once the price hits the cloud of limit sellers. Basically, you can never exactly know if the price will pull back or just slide through the cloud immediately. On the second bottom, I would buy it back, and my primary target would be the top of the cloud of sell orders, so around 75.36, which is also a solid 10-point move. To be clear, you couldn't see at the time how far the move would actually go. The best strategy to catch a massive move like this would be leaving a runner after closing a big part of the trade around 75.36. You should never try to catch a big move with a full position, as such moves are rare and there are often multiple stop hunts on the way up. The last example is a typical and very common rejection of an important level. In this case, the second standard deviation of the weekly VWAP. In the weekly VWAP speaks, smart traders usually stop chewing their lunch and start paying attention. You can see big limit sell orders coming in, and look when the real move down begins, exactly when the last limit sell order appears on the heatmap. The move down we got was not big, but we got our 10-point minimum target after all. 10 points is 10 points, and the market doesn't owe us a Lamborghini on every single day. The good thing was that the move went down about 6 points without a bounce, so it was great psychologically. The market never retested our entry, which is always good. There is nothing better for your heart rate than a trade that immediately moves in the green and stays there. The only con was that the last rejection happened very fast, so we had to react quickly. On the other hand, we were warned a few minutes before by spotting the first sellers. So if you missed it, you can't blame the market. It practically sent us an invitation in advance. Now to my trade management. It's a good example that reality often differs from hindsight theory, because on a historical chart, everyone is billionaire wizard. But in real time, it is a whole different story. My entry was on the first top as I spotted the limit sellers just at the second standard deviation of the weekly VWAP, which was exactly what I was waiting for. The price went down immediately and even got under the point of control, the yellow line. So it looked very well, but we got a little bit of back and forth around the point of control, and that was my first dilemma, to take some profits or not. I have to say that I tend to take some profits in this situation, and I also like to move my stop loss slightly into the green. As it was a choppy day, I knew that the market could bounce back up to make a double bottom. On the other hand, we could just continue lower immediately, so it is always a hard choice. I decided to sit it out and didn't move my stop loss yet because a double bottom was still a strong possibility. And spoiler alert, the market knows exactly what you are thinking and loves to test your nerves. And that's exactly what I've got. At the very peak of the second top, my position was even slightly in the red. But I still believed in the setup. Since I had only taken a smaller position initially, I decided to scale in and buy more puts here, but with a very tight stop loss of just 2 points. I was lucky as the price moved down quickly. Once we hit the point of control, I moved my stop loss to plus 1 point. I also spotted the last limit seller. Yes, this time with a delay, not immediately at the top, because I was focusing more on trade management. If the price were to go up again, I wouldn't be comfortable holding this position anymore. So it's better for me to take a little green, basically just lunch money, than to let it run back and hit my stop loss. On the way down, I closed the position once, hit the double layer of buy orders, even though we hadn't reached our 10-point target yet. We got a bounce immediately thereafter, but there was no good opportunity for a re-entry, so I stayed out. In the end, I walked away with around 7 points against 2 points risk. So the take-home message from this setup is that you will not always get what you expected. You always need to have a solid plan for unexpected situations. Tell me in the comments how would you react in this situation, and be honest. No hindsight flexing allowed. If you would like to learn more about our trading community or want to join us, visit our website. We offer 6 hours of live market commentary per week, usually split over 4 days. You will also learn a lot about trade and risk management and trading psychology. On top of that, every active trading day, you receive a deep dive trade of the day analysis. Learn to trade like an institutional trader. Now back to today's video.